I'm joined by Tai Hui, Standard Chartered's Head of Southeast Asian Economic Research. Tai, many thanks indeed for joining us this morning. I must ask you first of all, how big a concern is inflation right now? It has been a big issue all year, but how big a deal is it right now in the whole of Asia?
Well, I think the inflation concern has certainly taken a back seat relative to the growth outlook for the region. Obviously, inflation at the current level is still quite elevated, but I think we've seen the peak as of July, August, and we will see a gradual grind lower of the inflation figures. Of course, not quite like 2008 because commodity prices like food, energy is still holding up quite strongly, but nonetheless, I think the inflation worries is behind us. I think central banks will pay a lot more attention on the growth outlook of the region for the next year as well as the year after.
Looking at your research, you're saying that inflation has more or less peaked, and a big help for that is the decline in the price of commodities, isn't it?
Absolutely. I think if you look at food prices, corrected about 10% from the peak earlier in the year. Oil, of course, we've had a strong correction in the summer. It's bounced back from about $75 to $100. So in that sense, I think the correction in commodity prices has been very modest, but nonetheless, it still helps to establish a peak in inflation. I think also the fact is we do see consumer spending in the region moderating, not crashing, moderating. I think that will help also to contain some of the inflationary impact in the region.
Overall, we've got today figures out from Malaysia and also Singapore. Which country do you think worries you the most when you go through all your data, all your figures of the different countries? Which country stands out as a big concern?
Well, I think in terms of inflation, we're still watching Singapore quite closely for two reasons. One of which is because rental price is still relatively sticky. Of course, we do expect a moderate correction in the next 1 or 2 years on the back of increased supply, but at least for now, the rental cost will still be quite an important contributor to inflation. Secondly, the government is implementing a very tight supply control on automobiles, and therefore the licenses on automobiles or COEs are likely to remain quite expensive, and that will continue to keep headline inflation relatively elevated.
Do you think the central banks have been proactive or reactive so far this year?
I think they have been doing the right thing. MAS, Monetary Authority of Singapore, have reduced the slope of currency appreciation, reacting to the growth outlook for Malaysia and for some of the other Asian central banks. They have kept their rates unchanged, with the exception of Bank Indonesia, which have cut rates. I think they are balancing between the uncertainty of growth, but not to cut rates prematurely, given the fact that inflation is still, as I said earlier, still elevated, and also lending growth in many parts of Asia is still very robust. So I think we do expect central banks to take a much more proactive look at their growth outlook for the next 6 to 12 months, and some central banks may choose to loosen if we do see export deteriorate further from where we are now.
Thank you for joining us. Tai Hui, the Head of Southeast Asian Economic Research at Standard Chartered. They're one of the most accurate forecasters in the market.